Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, September 25th. Hope you guys are having a wonderful day here. We got just a couple items here today on the economic calendar. We'll start off with the Case-Shiller HPI, which is the housing price index for the month of July. So in June, we had a 6.2% appreciation, and it came in at 6% in July. So we're still showing appreciation levels growing. We're still seeing home prices going up, just at more of a decelerated rate here. So nothing to be concerned right there. Obviously, we can't continue going in double-digit rates there. So basically, this is a lot more sustainable and still very healthy for the overall market there. Last but not least, we got another phenomenal number here today. We got the consumer confidence for the month of September. We had a reading back in August at 134.7. Forecast for this one was supposed to have a slight dip down to 133.2, and it went upwards to 138.4. So fantastic numbers. People are feeling a lot better. They're feeling very confident where the economy is at. As Wall Street, stock market's going up. Wall Street's shrugging off the tariffs, as we'll just get into right now. The tariffs are, went into effect yesterday with China, and China did the same thing with the U.S. And people are feeling a lot more confident about where things are going. Even where investors are feeling a lot more confident where things are at. The fundamentals are showing very strong in the economy. The corporate earnings reports coming out are showing very strong. So overall, very good things here. Time will tell about the tariffs. If it goes into a full-blown war there, trade war, or if it will even be beneficial for either country. So again, this could hurt out the global economy. Investors on a global level are concerned because this could disrupt the global market. But again, right now they're kind of shrugging off, and the stock market is up. Not by a lot, but we are also beginning the FOMC two-day meeting. It begins today. Tomorrow they'll give their announcement. So today's going to be kind of a little quiet. They're probably going to wait until the announcement tomorrow by 11 o'clock Pacific Standard Time when Governor Fed Chairman Powell gives the speech and announcement. It is expected that they will raise rates for a quarter point tomorrow. This will be the third time they raised it this year. Now the increase for December has gone up to 75% for December. So rate hike in December is almost imminent as well. So that will be 1% we grow. Now this one's going to be important primarily because there's been a lot of talk about yield curves here. And what that means is we got the 2-year yield curve, which is the short-term rates, and we got the 10-year yield curve, the long-term range. Now, with the rate hike, when the Fed raises rates, it's the short-term, and that does affect the yields on these treasuries here. And with that next rate hike, we're right now about 0.25% difference between the 2-year and the 10-year yields, and that will bring us to what they call a flat yield curve. So that could bring us up to a flat yield curve. And then historically, and then with another rate hike possibly in December, that could bring us into what they call a negative yield curve. Now, historically, that's an indicator that we kind of follow that could help lead us into a recession. And typically, that could happen between 6 to 8 months because it takes a good 6 to 8 months for the rate hikes to actually be absorbed into the economy and feel the effects of that. And so sometime by late next year, we could potentially we'll hear more talk about possible recession here. Now, will the recession be bad? It remains to be seen. I mean, we had great job numbers. We're seeing some great fundamental numbers here. But again, we have to kind of wait and see how this plays out here going into the future. If this is going to be short-lived, if it's going to be into a crisis, we'll have to, again, wait to see. And it'll probably be another year until we kind of see that the ramifications of all these rate hikes, and as well as the trade tariffs and everything else. So let's see how this is affecting the bond market. Bond market is up about 5 basis. It's down about 5 basis points. So we dropped quite a bit yesterday. We closed at about minus 12 basis points. We started the day off lower, even off the new level of support or floor of support here, and now we're up a little bit for the day, but we're still down about 5 basis points. Now, most lenders didn't price in pricing for the worst yesterday, so you can probably see that today. So a lot of lenders will probably come up with worse pricing today compared to what yesterday's beginning days were. All right, so that pretty much will wrap things up, but we'll take a quick peek at the yields. And as the yields here, we're up to about 310 now. We're pushing up against this new ceiling of resistance here. And again, as you can see, these as we saw the other stochastic here, right here. We're still in this oversold position here, and here we're in this overbought position. So at some point they're going to need some type of push to go the opposite direction, get back into this normal trading range here between the red and green lines here. Now tomorrow with the Fed hike, that could potentially push us into that. So we might get a little bit of a reprieve in interest rates tomorrow. Now, technically, I mean not technically, but traditionally we've been seeing a lot of, we usually, when there's a Fed rate hike, and they talk about controlling inflation, a lot of times we're able to get a nice help or assistance from that for long-term rates, and we'll get a little bit of improvement. But they talk about inflation coming out of control, then that could be another story, and that they won't like that, and you'll see that continue to drop further here. So just be cautious coming into tomorrow about 10 o'clock Pacific Standard Time or 2 o'clock. I'm sorry, not 10 o'clock. I'm sorry, 11 o'clock Pacific Standard Time and 2 o'clock East. Yeah, 2 o'clock East Coast time. All right, so that pretty much wraps things up. If you guys want to get more information, just come over to Twitter. You can find me at Mike Bjork on Twitter. I do post throughout the day. For market closing, you'll get the updates on any market changes going forward. All right, you guys have a great rest of your day. Thanks so much for watching. See you guys tomorrow. Bye-bye.